Can you guys hear me? Seeing we're getting some people connecting here. Go ahead and write in chat, guys, if you guys can hear me. Just put yes. Cool. Yeah, you might have to turn me up. I have my mic turned all the way up, so you might have to turn up your speakers. Okay, we're gonna wait a few minutes. Wait for everybody to get in here, and then we'll get started. I have my mic all the way up, Miko. So it's turned up to the max. Actually, here, let me see if I can do it in Discord. Maybe I can change it a bit. If you guys have a hard time hearing me, just turn up your speakers because I have my mic turned up to the max. We're going to start at 1:05, so I'm going to give it, a few minutes for people to get in here, for people that are a little bit late. Sorry, not 1:05, 12:05, or 2:05. It's 1:05 for me. Cool. Sounds like everybody can hear. Weekend's been good, man. Thanks for asking. Just been lazy. It's been raining here, so just been lounging around. Played golf on Friday. We still have people joining, so we're going to give it a couple more minutes, guys. Yeah, hopefully, Miko, hopefully I can help you guys out, man. There's a lot to go over in trading, so it's hard to do it all on a webinar. So I'm going to give you guys a lot of information very quickly. Got like one more minute. All right, it's 2:05. We're going to get started. So welcome to the Madaz Money webinar, guys. For anybody who doesn't know me, my name's Miah. I posted my little Twitter handle there at the bottom. If you want to give me a follow after this, it's completely up to you. But I'm going to go ahead and start and give you guys my background. For a lot of you guys who don't know me or haven't messaged me in chat. So before I got into trading, I was in sales. I started selling cars when I was like 21, and I sold cars for about a year and a half, and then I got promoted to finance manager. I did that for about 6 years. So I worked in the car business for a long time, and how I got started in trading was I met a market maker, and I didn't know he was a market maker. I didn't even know what a market maker was, but I was working in the car business at the time, and I came across this guy, and he told me I should start trading. He said, "Hey man, you're young, you should start learning how to trade. Um, you can lose all your money, and you'll still have the rest of your life to make up for it." So um, that's how I basically got started. I listened to him, and I opened up an account and just started trading. From day one, I was hooked. I loved to trade. I was I wasn't doing it the right way. Obviously, whenever you first start, I was trading from like an iPad, and um, I'm sure everybody's been through that experience when you first start trading. But I placed my first trades like early or late 2012, early 2013. I was swinging large caps at the time. I didn't really know what I was doing. I was just kind of getting my feet wet, and so I was buying like AMD and Nvidia. I owned Facebook when it was like 18 bucks. Um, so I was just buying large caps and just kind of holding them for like weeks or months and then just selling them. I was making a little bit of money and then I was losing money. But it wasn't until I got to small caps whenever I started making some big mistakes. I started trading OTC pumps, and I didn't even know what the OTC market was, and I got dumped on huge while I was on vacation. I put in some orders for this OTC, and I got filled. I was playing golf. I was over at Pebble Beach. It was me and my buddy, and yeah, we were on vacation. We bought this OTC pump, and the next day we got dumped on for like it was like an 80% drop. I blew up one of my accounts at that time. I ended up refunding one of my accounts, and I traded for like that following, I want to say, year and a half, and I ended up just kind of slowly bleeding it out. So I lost 2 accounts at that time whenever I first started trading. Really wasn't knowing what I was doing. And after I got dumped on a couple times, that's whenever I started learning about shorting. And I spoke to that market maker that I had met, and he was like, "Yeah, man, you got to short those things." And he just kind of opened up my mind to, how to trade these things. So I was still working in the car business at the time. Um, I got to the point where I was basically working part-time and I was trading full-time. So I had a pretty different schedule. Um, I would trade from 7 a or 7:30 a.m. here. That's 8:30 market time because I'm in Austin. So I'm an hour behind. So I'd get up, I'd trade from 7:30 till market close, and then I would go into work an hour after market close, and I would work there till 10, 11, 12 o'clock at night. And I did that for a long time, and I just basically saved money and focused on growing my account. I think that's pretty important whenever you first start trading, is having a secondary source of income. Even if you're not making money trading, you just need some type of source of income to cover bills and pay for everything that you need to do, because that takes away a lot of pressure from trying to make money in the market. If you can have income on the side coming in, and then actually just take the time to focus on trading and just learn how to trade until you're consistent, then it's a huge benefit. It takes a lot of pressure off, because a lot of people want to go full time and they do it too early, and then they feel all the pressure of trying to make money in the market just to pay for bills and all these things. So if you guys are still new, keep that in mind. Have a source of income coming in. while you're learning to trade, because it'll help you drastically. But once I got consistent enough and I started, making a lot more money trading than what I was in the car business, I left. I was making good money in the car business too. I was making over six figures since I was 23. So I was just I had a goal of I wanted to bring in at least double my income, um, and before I actually left the car business. So um, from there, now you guys know a little bit about me. I'm going to go into basically what I do on a daily basis. My nightly routine, my morning routine, what I look for, how I approach the market. So I'm going to go through step by step exactly what I do. So what I do at night times is I'll go over all my trades, and I use specifically TraderView. I upload all my trades to TraderView. There's tons of different platforms you can use to track your trades, keep a journal. I think that's very important to seeing exactly where you're losing money outside of just making money. But Max actually he helped you guys out a lot just being a member of his chat. He provides that on his website. You can upload all your trades. It shows you all your stats, where you're making mistakes, where you can improve. So if you guys aren't logging your trades, or if you're not keeping a journal, or keeping track of everything, start implementing that into a daily routine. Whether you do that at night or after market hours, whatever it is, it's going to drastically help you. So elimination versus accumulation. I, I I like to focus on elimination instead of accumulation. A lot of people want to always try and get the next best thing into their trading. They want to look for the new play, or like the new setup, or like the new strategy, and they take their eyes off of where they're actually making their money, where their strengths are. So what I do a lot in my trading is whenever I upload all my trades, I'm not necessarily focused on like my good trades, where I'm making my money. I'm doing everything right there. I can make like some minor adjustments, but what I'm really focused on is elimination. I want to find out where I am making my mistakes and completely get that out of my trading, because if you can eliminate all the losses, or where you're making mistakes, and just focus on where your strengths are, you're going to see a huge increase of consistency, and you'll be able to grow your account a lot faster. So it's not necessarily having a bunch of strategies. I keep it simple. I really only trade certain setups, and I just stick to what I do best. So after I upload all my trades, I go over scans. I don't stick around for after hours. I need to breathe. I need my brain to rest. So I at nighttime I'll go back over scans, and I look at whatever ran after hours. And I'll look at Twitter, I'll talk to my friends, I'll look at chat rooms. I kind of see exactly, what stocks are moving after hours, because maybe it's going to be a play for the next day. And I'll gather up a watch list. I'll gather up a watch list for long term and short term. Now, I don't swing trade. I'm not talking about like long term, meaning I'm buying something or shorting something and holding it for a period of time. I'm building a watch list for long term and short term. So long term meaning maybe there's a stock running, but it's not necessarily where I want it in order to trade it just yet. It's setting up right, but it's not ready. So I'll put that on like a long-term watch list, meaning I'll keep an eye on it to see if it's going to be in play in the next day or two, maybe week, and then I'll have my short-term watch list, something that's going to be in play the following day, something that I can watch the next morning. So as I'm going through my watch list, or nightly routine, I'm building two separate watch lists, one for long term, one for short term. So something I can keep an eye on in the next coming days or weeks, and then something that I'm looking at for the following morning, something that I'm going to be, most likely trading. So whenever I get up in the mornings, the first thing I do is I look at the short-term watch list. I want to see exactly what those things were doing pre-market. Are we gapping up? Are we gapping down? Are they just not moving at all? Is there no volume? So I'm looking at that short-term watch list and trying to see exactly what I was looking at last night, seeing if these are still in play for the morning. Because things can change. Maybe another ticker gets attention, and then that stock that was in play the day before, and just loses all the attention, and it's not going to trade any volume. So I want to see what my short-term watch list is doing, what those things are, if they're gapping up or gapping down. Then I'll go over all my scans. I look at all the new potential plays. I want to see, what's gapping up, what's gapping down, seeing what has volume, just looking for new potential plays that I can maybe add to my list for that day to trade. I also go over, Twitter. I look at chat rooms. Chat rooms are really great for many things, guys. It's not just for like, um, learning from guys like Max or, Lucas or, whoever all day. You can also use it to, find tickers that might be a good play for you. So maybe somebody saw something on scan that you didn't. Maybe it didn't pop up on your scan, and you can go through the chat room, look at that, ticker, and see, is this going to be a play for me or not? So there's many uses to the chat rooms, guys. It's not just for, learning how to trade, but you can also use it to find good potential plays. Um, so once I find out like my watch list, what I'm looking at, for that day, um, the main thing is, I need specific criteria in order for me to even consider a trade on these stocks. Okay. So the criteria that I'm looking for is it has to have volume, it has to have volatility, and it has to have range. If it doesn't have those three, then I'm not even going to consider a trade on it. Like I'll just take that stock right off the list. It's not even going to make my list. So whenever I'm going through like pre-market scans, if the stock does not have volume, it's not volatile, and it does not have range, I won't even go into the other criteria to look at market cap, float, IO percent, sector, news. I don't even care about that because it's not trading any volume, volatility, or range. Those are the most crucial for me to even get my attention to look deeper into the stock to see if it's a potential trade or not. So um, volume's changed a lot recently, just because we've had such an influx in volume this year. Before, I used to look for stocks that would trade a minimum of 200,000 shares pre-market. Now I won't even consider a stock to trade it unless it's trading at least a million pre-market. So volume has kind of changed over time just because we've gotten so much, people opening up accounts, and just with the market crash, everyone's buying into it. So we're seeing a lot more volume. So when I'm looking at pre-market scans, I want to see at least a million volume traded pre-market. Otherwise, it's not going to be something that I'm considering to trade. Volatility. Volatility is very important. It's basically how fast a stock can move in a given period of time. And you want big moves very quickly, whether that's up or down. And it needs to have range too. So a stock, could be trading volume, it could be volatile, but it also needs to have range. And what I mean by that is maybe it's volatile, like it moves up 50 cents and then down 50 cents and then up 50 cents, down 50 cents. I want it to be moving, have volatility where it moves multiple dollars and then it can come back multiple dollars as well, and then maybe even drop lower. I want, big range in the stock, something that can move, 20, 30, 40, 50, 100%, and then also have that same type of percentage moves on the way down. So you want volume, volatility, and range. If it doesn't have those, I'm not even going to consider a trade on it, guys. So once I find a stock, pre-market that has those things, then I'm going to dig a little deeper. I'm going to look at the market cap. Is this a small cap? Is this a mid cap? Is it a large cap? What am I dealing with here? What type of float is it? Me personally, I don't like to trade stocks that are 2 million float or less. A lot of the reasons why is because, whenever you get a stock that has such a low float like that, it's easy for the float to get locked up on the long side. And me, mainly as a short seller, they have a lot harder time dying out. So, nobody's selling, they're just holding, and it just keeps ripping. So float is very important. It also is very important as far as liquidity. So if it's got good volume and it's got a big float, liquidity is very important. That's going to determine a lot of the size that I'll use. IO percent. IO percent is, basically institutional ownership. That's important just because, like I said, as a short seller, if it's got a 70% IO percent, then it's most likely not going to die out as easily as a stock that has like a 10% institutional ownership. These institutions, they have, they have a big stake in the company. They're not going to want to just have the stock die out. They want to hold for a long time usually, and that's not always the case. Sometimes they do sell off pretty well, but depending on the IO percent, that's going to determine, whether I'm, going to be trading it or not, or at least considering a trade. And then I also want to see what sector it's in. Sector is very important. Recently we've had a lot of, like the EV cars. That's been a hot sector lately. Tesla, NIO, that's been a pretty hot sector. So knowing what you're getting into, or knowing, what type of sector the stock is in is important. You'll know, maybe I should be more patient on this one because it's going to run. It's getting attention. It's a hot sector. Or maybe it's just, something that's, like a biotech, and they're just, pumping their news, and it has nothing to do with, any hot sector. Like, it's not part of the EV, it's not part of COVID. So knowing what sector the stock is in is very important. So after I figure out those things, I'm looking at the market cap, float, IO, sector. I also want to know why the stock is running. Is it up on news? Is it up on earnings? Do they have a conference call coming up? Are they presenting here soon for their product or service? And then I want to look at the daily history. I want to see, is this day one of the move, day two, day three? Is this a dead cat bounce, or is it just a random gap? And then I want to see what it's done in the past when it's made those moves. Like every time it gaps, does it just, die out? Does it just bleed out and sell off? So I want to know why the stock is running, and then I want to know what it's done in the past when it has run. And then I'll go into fundamentals. I want to know exactly what the stock is about. Now, you don't have to do this so much with like mid and large caps. A lot of those mid large cap companies, they're real companies. They make a product, they have a service, they're profitable. They aren't going to be dropping offerings midday. So if it's a small cap, I want to know how much cash they have, how much cash they're burning. Do they have any dilution right now? Can they raise money? How desperate is this company? What's their agenda? What have they done in the past? Do they just pump their stock and then drop offerings every time? I want to know how desperate this company is, because that's going to determine a lot of the risk in the trade. If the company has a 50 million ATM, it's not something that I'm going to be wanting to long. So that greatly increases your risk. So once I kind of figure out my watch list, I've kind of gone over all the criteria that I want in the stock, and I've kind of figured out exactly what I want to trade. Then I'm going into the technicals. I'm ready to make a game plan on what I'm going to trade. So when it comes to technicals, I'm looking at daily support, resistance. I'm also looking at intraday and pre-market support. So intraday, maybe it's day one, day two, day three of the move. But if it's run previous days, say this is day three of the move, I'm going to want to know what the pre-market, what the previous days support and resistance are. I want to know if this stock is going to be holding trend or if it's breaking trend, because you don't want to be fighting trend on a stock. So as I'm getting ready to trade it, I'm marking up the daily support, resistance, the intraday, pre-market support and resistance. Then when it comes to like actually trading the stock, volume is very important. I've already mentioned it before, and Max has actually a really great rule that I've implemented in my trading. Is he wants to see at least 200,000 shares traded per 3-minute candle. So for most of you guys, I think you already use that rule, but for the ones that don't, start using that rule. It's going to keep you safe on stocks that are too illiquid, because if it's too illiquid, then they're going to be erratic. The moves are not going to be predictable, and you can get caught in a quick move against you very quickly. So as I am getting ready to trade it, I'm watching the volume. I use level 2 and tape. That's probably one of the biggest things when it comes to entries and exits for me. I'm paying attention to the order flow. Which direction is the stock moving? Like how strong is it moving up? How strong is the sellers? Hold on, I gotta take a drink. So level 2 and tape is very important in my trading when it comes to entries and exits. And I'm also watching candlesticks. I never studied candlesticks as far as like, Japanese candlesticks or dojis or anything like that. It just came from experience of seeing stocks move over and over and over. You slowly start to develop like, um, you know, I guess like patterns in the candlesticks, or um, seeing like how they move, where the traps are, all those things. But understanding volume, level two, tape, candlesticks, I mean that's really just basic supply and demand. Understanding order flow of the stock, like how easy is or can it move up versus coming down. Which direction is the stock actually moving? Is it moving up, but is it struggling? Is it getting sold into on each push up? You want to know how heavy the stock is or how strong it is, because you don't want to be on the opposite end. And then understanding odds and risk. So whenever I'm looking to enter a trade, I've tracked all my trades, and I've tracked every setup that I do trade, and I've gotten it down to where I will not enter a stock unless I know I have at least a 70% win ratio or higher. So if it's a 50-50 trade, I'm not going to enter there. I'm going to wait. If the stock never gets to the point where it does give me that 70% or higher win ratio, then I just don't trade it, guys. It's all about odds, and it's all about risk to me in my trading. So I'll be patient and wait for the right times to get in that are going to give me the highest odds. It's going to reduce my risk, and it's also going to increase the odds of me winning in a trade. But sizing is very important when it comes to entering. So let's say if a stock is going parabolic, and it's still strong on the tape, it's still trading good volume. It's not giving me any indication that it's going to die out just yet, but I know that it's at a point where it does have, say, a 70% win ratio. Then maybe I'll go in with like half size, or maybe like 3/4 size. I'm not going to go in full size with a 70% win, entry. I'll wait for confirmation at that point, or I'll wait for the stock to go higher to where it gives me a much higher percentage of a win ratio, like 80-90%. That's more of something that I would go in full size on. So staying safe in the trade, sizing is very important. And then patience. Waiting for confirmation instead of, like trying to guess the top. Like say if you're shorting a parabolic move, waiting for confirmation or being right instead of guessing is going to save you so much pain and agony, and it's going to allow you to, not have so many cuts, not take so many losses before you actually catch the right move. So being patient and letting the stock run or letting the stock dump, depending on your strategy, just waiting for confirmation is going to help you drastically. You don't have to catch the whole move. You don't have to catch the very top. You don't have to catch the very bottom. You just need to be right. So I am willing to be patient enough and wait for confirmation and maybe miss part of the move, and instead of trying to guess it and being wrong and then finally catching the spot that I'm right in, and then having a much smaller gain. So being right in the trade instead of guessing or waiting for confirmation it's just a lot less stress in trading, guys. It's going to save you a lot of money as well. But like I said, I am okay with waiting for confirmation and missing part of the move and being right in the trade instead of trying to guess and being wrong and just taking cut after cut. So one way to be patient, I used to do this years ago. I don't do it anymore, but I always tell people like that are maybe they're above PDT and they're consistent, but they're still taking some losses. I always tell people act as if you're still under PDT. And what I mean by that is, let's say if you're having a hard time being patient in the trades, or being patient for the right entry, act as if you are under PDT. You only have 3 trades per 5-day rolling average. So ask yourself before you're even getting into the trade, do I want to waste a day trade here, or do I want to be more patient and wait for the better entry? Because when you're under PDT, you only have 3 trades a week basically. So if you have a hard time being patient, just act as if you only do have those 3 day trades, and ask yourself before entering, do I want to waste my day trade here, or do I want to be more patient and wait for the better entry or the better play? So that's something that's helped me in the past, and you might be able to use that in your trading. But always have a plan, guys. You need a plan before you're even considering a trade. You need to know where your entry is, where your exit is. You need to know where your risk is. If you don't have a plan before you're trading, then you should not be in the stock. Um, so I've been helping my brother out recently. He's learning how to trade, and I've noticed that whenever he first started trading, he was doing that. He was just entering, but he didn't have an exit plan. He didn't have, where his risk was, and so he would either be taking profits too early or he would be cutting, too late. And the whole point is to have a plan. You need to know where you're going to be entering, where you're going to be taking profits, and where your risk is, just in case you're wrong. And you need to stick to your risk. I always ask myself, whenever the stock is running to my risk, and say, I need to cut my position. And even though I don't want to cut it because maybe it's a bigger loss, I always ask myself, do I want to take this loss now, or do I want to wait later and take a much bigger loss? So that's a good way to stick to your risk, is, do I want to take the loss now, or do I want to wait until it's a much bigger loss and take it then? So nobody likes to lose. I mean, we never want to cut our positions and take a loss, but sticking to your risk and keeping those losses to the most minimal losses as you can is gonna keep you in the game, guys. It's gonna help you protect your capital and continue to trade. But sizing properly, you don't ever want to add to losers. If you're wrong in the trade, don't add to a loser. That's just going to make things worse. It's okay to cut and at your risk, and then get in, at a different spot. It's much better than doing it that way than trying to hold on to it, even though it's broken your risk, and then add to a loser, and then say you're still wrong, and now your loss is even much bigger, because not only did you not cut at your risk, but now you're adding to a loser, and it's still going against you. So keep that in mind whenever you're trading. Don't add to losers. And then risk management. Risk management is by far the number one most important thing in trading to me. And risk management starts from the time that you're even looking at a stock. So whenever you're looking at oops, I think I messed that up. There. By the time, whenever you're making your watch list, this is whenever risk is starting. You need to be looking at the stock, like how fast it can move, how much volume it normally trades, what it's done in the past. Do they drop offerings? Is this more of a real company? Risk starts from the time that you're even looking at a stock and whether you're deciding whether it's going to be on your watch list or not. From there, it comes down to volume, volatility, range, what the float is, what the institutional ownership is. Risk starts from that point. Risk is not just, hey, I'm going to enter here and risk here. That's way too simple. You need to broaden the risk management to the point where you're deciding what type of size that you're going to be taking well before you even get to that point. Because staying in the game and keeping your losses small is very crucial. I mean, it's hard to take a loss and come back from it whenever you're first starting to learn how to trade. But so I'm gonna go over some trades with you guys, though. I have a list of some good trades. I've got a couple bad trades. I have more bad trades than that, but I wanted to show you these two specifically because I got very emotional in these trades. Most of the time, whenever I have a bad trade, I usually just cut it. It's usually a small loss. But every once in a while, I'll get emotional and I'll make some mistakes. So I'll go over some good trades, and then I have two very important bad trades to show you guys as well. So MVIS, this is a really good example of a stock that has volume, right? It had a couple candles that were over 2 million, well over 1 million shares. So it's got the volume, it's got the volatility, from pre-market all the way up to the highs. I mean, that's basically a 50% move that it made. So it's got the volume, it's got the volatility, and it has the range. It's not just going up, 50 cents and dropping back out. So whenever this stock opened up, I remember watching it pre-market, And whenever the stock, the market opened, it ran up and it was kind of stuffing pre-market highs here. Now I do like to use that strategy. I've learned that from Max, but this one was only up like 30 or 40% pre-market. So I wanted to see if it could run. If it did die out from here, I was okay with just missing it. I wanted it to really run and create a much bigger play in order for me to even get interested. So I was just patient. I didn't enter here. I just waited for it to run, and it turns out I was right. It trapped a lot of shorts in this move, squeezed them all the way up, and then I waited for confirmation as it was stuffing. Not just once, but I think 3 times here. It's hard to see that third candle there, but it stuffed 3 times, basically above, like 320, 330. I started building in short. Covered a piece, started adding, let it wash down. I covered right here, which is going to be pre-market support. So catch the move, very simple trade, right? It bounces up, level 2 is confirming again, start building in short, and then I wait for the wash of breaking here, which is going to be, the pre-market support. Washes down, cover into the wash after it breaks support. So very simple trade. It just takes patience, to hit that one. You can't get in too early, you can't chase the move up. Even if you miss the top here, you could catch this move, which is, it's going to be a lot more, a lot higher odds here than it would be up here. This is more like 70%. This is going to be more like 80%. And even if you're wrong, then you can cut your loss very quickly. Say 320 or even 330, something like that. So very low risk reward trade there. NNDM. Now this one was pretty interesting because they dropped an offering pre-market. I remember when this thing ran, it had tons of volume and it had a huge run. The next day it gapped down. They dropped the offering pre-market, but one thing to keep in mind is whenever a stock is dropping an offering, they need the liquidity. They can't dump shares unless they're going to have buyers. So you can't sell a share unless you have a buyer on the other side, right? So that's always something to keep in mind. They need the liquidity in order to dump those shares. So what they do is they drop the offering pre-market. It didn't trade much volume. What do? All these shorts that tried to chase the move down, they're all shorting it here. Market opens, they squeeze them all out, and they use all of those short covers as liquidity to drop their offering to sell their shares, right? So whenever I was watching this as the market opened, I remember getting in here, and because it looked weak at that time, I remember seeing the tape turn. I got in, and then it turned out I was wrong. I cut it right away and let it do its thing, let it run. It halted, and then whenever it resumed, same thing, tape turned, I hit it, it dumped out, and then I just covered on the wash. So this is kind of a patience trade. If they didn't squeeze this, I probably would have never traded this stock. But I had a feeling that they needed the liquidity in order to dump shares. So you got to be patient on those plays. This is a good example of like the pre-market stuff that Max likes to trade. So I remember watching NTN. I liked this move here. So whenever it came up and it stuffed out and it tried a second time, it had a nice lower high here. So I was waiting at the open. I was thinking, okay, if it pushes at all, I'm going to hit it and I'm going to risk, the high of this candle. So as it was pushing, I just started loading in short. Once it confirmed, I added on the bounce, cover down at the bottom, which is going to be support from the previous day, I believe, or after hours. So again, very simple trade, very low risk. You can short it, use pre-market highs here or even highs here. I would prefer using this as risk because if it's going to break this one, it's possibly going to break the next one. So very low risk trade. Oops. Nero. So Nero was kind of interesting because this one took a little bit of patience. You can see it made this huge parabolic move, and whenever it ran up here, the reason I was shorting here, there was a couple reasons. So you can see it made the first parabolic. It pulled back, it pushed back up, it made this lower high, and then it pushed and broke, right? But whenever it pulled back here and then tried to push again, this breakout above this candle was very weak. It wasn't as big of a move as this one here. So whenever it pushed above this candle, it was fairly weak, so it looked like it was going to roll over. The tape was confirming as well, so I started loading in short. Whenever it started washing out, it couldn't break that support level, which was the top of this candle. So I gave it a couple minutes. Once it couldn't do it, I just got out and I thought that there's a chance that this thing runs higher. So I got out. I was up like 30 something cents there, so it was okay to take profits. And then just let it run. It squeezed everybody else out that was trying to hit this as well. Squeezed them all out. Once it confirms, you start building in a short. I was using smaller size on this. I wanted to wait for confirmation. This is really where I was loading my position on the small bounce, because sometimes you got to be very careful on these front side moves. It's better to use small size and then wait for the pullback and the bounce to really load into, because that's going to give you a much higher odds. Because let's say if you start using full size in the beginning and you're wrong, it's going to turn into a big loss. So what I like to do is use small size in the beginning. In case I'm wrong, I can cut for a small loss. And then once it confirms, then I can start adding in and loading into my position. So once it stuffed out, I was watching the tape, just started scaling in. It washed out here and then loading into the adding to my position once it confirmed, and then just scaled out on the wash. So very simple trade as well. It just takes patience a lot of the times, guys. A lot of these trades take patience. People try and catch these huge moves, or try and get in too early and they get in trouble. So fun. This one was interesting, and these are more difficult parabolic moves to trade, but a lot of them are just tape reads. So why this one was difficult was it was a very cheap stock. It was less than $1 the day before. So when it started running, these halt bands are a lot tighter, and you can see how many times it halted. So whenever a stock is doing this, you just got to step out of the way and just let it run. And once it has the first sign of weakness, that's whenever you want to hit it short. So it's purely a tape read, and you got to be fast. I use hotkeys on everything that I trade. I don't input any of my orders, but whenever you have a stock like this where the halt bands are so close and it's getting volume, you just got to step out of the way and just let it do its thing. But once it shows the first sign of the weakness and you see the level 2 change, that's when you hit it. So I started loading in short. It halted down and then just cover on the resumption. So this one here, PSTI. Trying to remember this. Oh yeah, I remember this trade. So PSTI, I remember I was looking for it to run out of the gate, and it didn't run out of the gate. It was pretty weak. It was selling off, but the one thing that I saw, it was holding support here, and it was kind of curling around. So anybody who is hitting short, if it started squeezing them, it was going to be a big squeeze. Obviously, you can see that. But if it didn't give me the move that I wanted out of the gate, then I'm just not going to trade it. I'm gonna be patient. I'm gonna be waiting, because if it doesn't give me what I want, then there's just no trade. So I kept my eyes on it because it kept basing. It was holding that $4 area pretty well. It started to curl, and then once it did start squeezing, I wanted it to see breaking pre-market highs. So once it broke pre-market highs, this is also a good long trade that Max likes to do, is that once it breaks pre-market highs, it pulls back, it holds pre-market highs. You can long this dip for another rip. He really likes to trade those, but that's not really my thing. It's harder for me to do that. I like to short. I know what I'm good at, so I just wait. The reason I didn't hit this short is because it had just broken pre-market highs, right? So whenever it broke pre-market highs, you don't want to necessarily short right away. You want to see if it can pull back and hold the pre-market highs first. Now, if it had washed out and that was the top, that's okay. I can always get in on a bounce, but I'm not going to hit this here knowing that support is right under, and give me a low odds of an entry. So once it ripped and it squeezed basically everybody out, then, you just wait for the tape to turn. Once there's confirmation, I just started loading in short here and just cover down into the wash, which is going to be, again, support. And very simple trade. Like I said, it just takes patience on a lot of these guys. So whoever was shorting here, you want to get everybody squeezed out. You want to wait for the stock to get exhausted. Once it's exhausted, then you can get in. There's no more shorts in. It's going to have a pullback. Every long is going to want to take profits. WIMI. Okay, so WIMI was a very interesting one. WIMI was very tough too, because if you look at the daily on WIMI, there wasn't any resistance. It had basically went sideways for a very long time. So the day that it was running, there was no daily resistance. There was nothing up above. It had never run before. So I didn't know how far this thing would go. And so that becomes a much more riskier trade. You got to be patient on it, and just be prepared just in case you have to cut. So the main thing is, anybody who's shorting it early, just let them push the stock up. Anybody who's chasing it long, eventually there's going to be no more buyers. So you got to wait for the time that there's no more buyers in the stock. People are going to want to take profits, and there's nobody else to squeeze. So so this one here, like I said, there's no daily resistance. There's really nothing to play off of. This was just purely a tape read here. Once it kind of stuffed out, just started loading in and covered. It looks like a small move, but this was actually about $1 move in the matter of just a few seconds. So you got to be quick, and you got to be prepared to cut fast, because this thing could have easily just kept ripping. Now let's go into the bad trades. We're going to go into alt, because this one really got me, and I got very emotional in this trade. So it had run the day before, and it ran right into the close pretty much. Like the last hour, alt started running, and it topped out at $20. So the next day when it gapped down and then it started squeezing like this, for some reason I had $20 in my head, like thinking, okay, I'm gonna short at $20. That's where it stuffed out last time. For some reason I had $20. For some reason I started loading in short in the 17s, and this is where I made my mistake, because I wasn't just loading in short, but for some reason I started loading in big size. I don't know why, but as soon as I did that and I was down a lot, I got very emotional in the trade. You can see how many executions I had. I was in and out, in and out, in and out. And this whole move up, I ended up taking a $46,000 loss. So $46,000. And the worst part about it is, because I got so emotional, when the real trade came to catch this, pullback, I was too emotional to hit it with the size that I should have hit it with. And I only got back, it was like, I don't know, like 16 grand or something like that. So took a $46,000 loss and then made 16 on the backside. If I had just been more patient and hit $20 and then cut, whenever I needed to, and then just let it run and then catch the real move, it's possible that I could have made, 20, 30 grand that day instead of losing 30 grand that day. So that's this is how fast, emotional trading can get you. If you guys actually look at this time, wait for that thing to move. This was in the matter of about 15 minutes. So emotions are your worst enemy in trading. And if you can't recognize whenever you're getting emotional, then you can get in trouble very quickly. The thing is, I knew I was getting emotional and I ignored it. And that's a very bad thing to do. I'm going to give you another example just from the other day. It happened to me the other day. It was on SNDE. So on SNDE, I'm sure you guys traded this. I think we all did. Right out of the gate, I was hitting the $4 area. And I got into about 10,000 shares here. But I didn't get my full size. I wanted about 17,000 to get short. So I only got filled about 10,000. And as it was washing down, I still had my open orders there. So I was trying to cancel my orders, and I didn't cancel them. I accidentally hit my cover button instead, since I use hotkeys. So you can see where I was entering, and then I covered just in this quick wash. When that happened, I got very upset. I was like, man, like I just missed this huge trade, right? And because of that, I made a pretty bad mistake. I started loading in short right down here at support. So because I fat fingered a cover instead of canceling my orders, then I just started loading in because I thought, man, I'm gonna miss the move. I got FOMO basically. I thought, man, I'm gonna miss the move. This thing's gonna wash down to like $3 or maybe a little bit more, and I'm gonna miss that whole trade. So I just started loading in short here, and I noticed 350 was holding like over and over, and I remember sitting here and saying that to my brother and my buddies that I was trading with. I was saying, man, 350 is holding too much. This isn't right. It should be washing by now, and if it reclaims VWAP, I need to get out. So it reclaimed VWAP. I started covering, but then again, I was emotional. I had already, messed this whole trade up. So I started adding again here, and I just kept getting squeezed, added here. And then where did I cover my position? I puked the top. I covered the very top. And it wasn't a huge loss. I mean, I managed this fairly well considering how bad of a trade that was. But the main thing is, this is how fast emotions can get the best of you in trading, which is going to be the next slide that we're going to talk about. But I covered at the very top. So if I had just stuck to my rules, and even if I made this mistake here, if I had just covered everything on that VWAP reclaim and let it run, then I could have made the money back plus more, and I wouldn't have been so emotional in the trade. I did catch the piece here on the way down, and then short, and then covered little pieces and just kind of scalped it. But the main thing is, this could have been a much better trade if I just didn't let my emotions get the best of me in this spot down here at the bottom. But yeah, that's going to go into our last slide here, mental and emotional capital. So we can't control many things in trading, guys. We can control our entries, we can control our exits, we can't control volume, we can't control how far our stock is going to gap, we can't control a lot. We can't control offerings. So there's very limited things on what we can control in our trading. So mental and emotional capital is very, very important in my opinion. So mental capital, I'm sure you guys have done this before, where maybe you're like trading a stock and it's very difficult to trade, and you're just burning energy and you spend all day trading it, and maybe you made like a couple $100 and you're like, man, and you just feel drained at the end of the day. And then you come back to the market the following day and an epic play comes around, but you're so out of it from the day before, or so more like trading scared, that you can't take full advantage of that good play the following day. So wasting energy on the wrong or more difficult plays is something that I cut out of my trading. If a stock is not trading the way I like it, then I'll just avoid it. I'm not going to waste my energy on it. I'll wait for the more clean, free-flowing stocks, stuff that I know I can make money on, instead of trying to like battle against a stock that's a holding trend that's not in favor for me. So mental capital is something that can, how can I say it? It can be a detriment to you, because it can take away a lot of your energy to really take advantage of the better plays. So be aware, be mindful of that. If a stock just is not trading right, just stop trading it. Just avoid it. Don't waste your energy on it. Wait for something that's much better, much more free flowing, something that you can bank on. You don't have to trade every day. You don't have to make money every day. You just have to be consistent. So it's hard to be consistent whenever you're wasting your energy on the wrong stocks or on the more difficult plays. So also taking vacation is very important. I had my biggest month the month that I took vacation on. I went on vacation in June, or my biggest month for this year, which was June. I went on vacation, so I didn't even trade that first week really. I took a laptop with me, and I was just catching kind of a couple plays in the morning and for like 30 minutes, and then I would go have fun for the rest of the day. So I barely traded that first week. So I really only traded pretty much 3 weeks out of the month, and I had my biggest month of the year. So, recharging those batteries, staying focused, and having hobbies outside of trading is very important. I go play golf a lot. As soon as the market closes, I don't stick around for after hours. At that point, I'm burnt. I need to recharge, so I'll just go to the course that I'm a member at. I just play golf, take my mind off things. I'm out in nature, just relax, and it helps you stay, focused for the next day. And then emotional capital, this ties into those losses that I just showed you guys on how fast you can turn a good setup into a bad loss. If you get emotional, if you get FOMO. So we all have losses, guys. Nobody has a 100% win ratio. That's not going to happen. So it's how you deal with the losses. That's the main thing. I've had some of my biggest losses in my trading career this year, and I haven't let any of them get to me emotionally, just because I know, hey, I made some mistakes, but that's not going to change, the way I trade. I just need to recognize, hey, I made some mistakes, try and get better from here, but mainly stick to your bread and butter, stick to what you're best at. Sizing has a lot to do with that. Now, this is something that a lot of people don't understand, and a lot of newer traders try and do. They try and size too big too early. Sizing comes with experience. You see, like, say, Lucas and Max and some other traders, like, say, on Twitter, that are, having these huge P&Ls. Keep in mind, these guys have a lot of experience. They know how to manage risk. They know how to size in properly, and they know how to keep their emotions out of their trading. That's the biggest thing. So if you ever find yourself in a trade and you're getting emotional, it's probably because you're sized too big. So you'll know if you're sized too big if you're more worried about your P&L than staying focused on the trade. So if you are looking to up your size in your trading, then you need to have the same type of emotional detachment in your trade, whether you're taking 100 shares or 5,000 shares. It needs to be exactly the same to you. But if you're going to be going in, say, 5,000 shares, and you're getting nervous, or you're all you're doing is you're focusing on your P&L and you're not focusing on the trade itself, you're not ready for that size. You're getting in too big before you're ready for it, and you're going to make mistakes. So keep that in mind, guys. Sizing is so important. Sizing comes with experience, and it comes incrementally. So if you're normally trading 2,000 shares, maybe go 2,250. If you want to start upping size, or maybe 2,500. Don't go from 2,000 shares to 5,000, or 2,000 to 10,000. Those are huge jumps. Those are things that can really cause problems if you're not careful. But also recognizing when you're getting emotional, this is one of the hardest things to do. So when you're getting emotional in your trade, you need to be able to recognize that and understand that hey, I'm getting too emotional. I need to step away. And when that happens, you can do one of two things. You can either reduce your size in the trade right away, so you can sit back and be a little bit more comfortable in the trade and be able to focus, or you need to get out of the trade completely and maybe go on like a walk, go on like a 10-minute walk, step away from the computer, recharge your mind and come back whenever you're fresh. Because emotional trading is, like I said, your worst enemy. There's only so many things that we can control in trading, and this is one of them. And if you can master it, well, then you're gonna really save yourself some big losses. And I make the mistakes sometimes. I just showed you 2 trades of whenever I did it. It's rare that I do that, but sometimes it happens. So nobody's perfect. The main thing is you just can't beat yourself up if that does happen. So recognize whenever you're getting emotional, downsize if you need to, or just get out of your position completely and go for a little walk, recharge your mind a little bit. But I hope that was beneficial, guys. I tried to go through a lot of information fairly quickly. There's just so much in trading to go over. It's hard to put it all into one webinar. So I wanted to kind of go over a lot of things fairly quickly. and then I also wanted to sit here and answer as many questions as I could. So I'm not sure where you guys put your questions. If you put them um, in the YouTube live chat, or if you put them in here. Um, but I'm gonna stick around as long as I can and answer every single question. Um, so I want to make it as beneficial as I can to you, for you guys. So I'm gonna scroll up a little bit, and I'm gonna look at these, see if I see any questions in here. Um, let's see what we got. I have 4 questions. Okay, we'll start with you. Under what percentage of IO do you prefer you short setups, and does that percentage change according to market cap? Yes, it does. So if it's a small cap, I like to trade very low IO percents. So say if it's like a 200 million or 500 million market cap, or even less than that, then I want the lowest IO percent possible, because it's a small cap. It's probably a crap company anyways. So I don't want big people involved. I don't want firms involved. I don't want people that are just going to hold the stock up, because I'm mainly short. So I want the smallest IO percent as possible. But it's also based on price action. Sometimes these stocks will run and they have, like, say, a 90% IO, but the tape is saying a different story. The tape is saying that they're selling. So I'll take advantage of that. And if the price action is confirming what I like to see, well then I'll kind of ignore the IO percent at that point, and I'll trade the setup. The next question is, do you also trade random tickers throughout the day, or only the tickers from your short and long-term watches? Yeah, there's sometimes that, like, say a stock maybe pops up midday, and if it's the right setup for me, or if it's the right play, I will trade it. So that doesn't happen all the time, but yes, sometimes it does. So the main thing is to keep an eye on your scanner throughout the day. Midday, sometimes that happens. So you just be prepared. But those are kind of more experienced trades, because if they're running midday, you got to be able to run through that information fairly quickly. Like kind of what I was saying, you got to be able to run through, like, how volatile this stock is. Does it have volume? Does it have range? What it's done in the past? What's the market cap? What's the float? You got to be able to run through the whole bit fairly quickly in order to trade those setups. So that takes a little bit of experience to get to that point whenever a stock is moving really quickly midday and being able to trade it. How do you determine that you have at least 70% win ratio before entering a trade? So I've tracked all my trades. I tracked my trades for years, and I've broken it down to where I know basically what setups I like, what setups I don't, and I only stick to the ones that I trade, or basically my bread and butter setups. So based on the trade itself, or like the setup, I'll know what type of percentage or win ratio this is going to offer. But it's only because I've tracked them. I have hundreds and hundreds of spreadsheets that I've tracked over the years. I don't really do any tracking anymore. I've kind of broken it down and kind of simplified my system. But in the past, I tracked everything. And Lucas will tell you, me and Lucas worked on many different things together. And yeah, we tracked, we would stay up, shoot all night, and just track trades all day, every day, outside of market hours. So it all came from tracking the trades and then backtesting. So whenever I would backtest, I would do it on Thinkorswim, and then I would input all the data into spreadsheets, and then formulate the percentages. And that's basically what I did. The bad WIMI trade happened a day after the bad alt trade. How do you start each day with a clean slate? The WIMI trade was actually a good trade, if I remember right. Yeah, the WIMI trade, I nailed this one. So I rarely have 2 red days in a row. It doesn't really happen. I can't remember last time I did do that, 2 red days in a row. If I have a red day, that's fine. It happens. Nobody's perfect. You're gonna take losses. So The main thing is to, how you react to your losses. So, if I take a red day, it's like, okay, like that's to be expected. I'm gonna have a red day. So, I come back the next day fresh, and just I do my same setups, my same approach every single time. It's not going to be perfect. You're going to take losses. So, um, you just gotta like I said, it's how you react to the loss. We all take losses, but you know, it's just your reaction to it. I'm not going to let a loss affect me emotionally to where I can't come in the next day and trade. Um, let's see. Also, the bad SNDE trade happened after a mistake with your cover. How do you learn to go and start each trade with a clean slate? Okay, so I got really emotional on that SNDE trade. Um, so, like I said, the main thing is to recognize that you're getting emotional. I remember stepping away from my computer at one point during SNDE, and I went to my kitchen. I filled up my water bottle because I always keep a water bottle next to me when I trade. I kind of stepped away, grabbed some water, and just, kind of got away from the screen for a few minutes. So the main thing is to recognize when you're getting emotional, and then, you know, um, take a little breather. Step back. Because if you're still emotional when you come back to your setup, then it's hard to place another trade. You might want to just take a break for the day, or even take the day off, and reassess your trade that night, and then come back the next day with a clean slate. So um, it all comes down to emotions. That's really the answer for your question there. Um, so we got Mason here. It says, can you talk about some data you track and what you look for in the data? Also, if you can touch setups on how you track, backtest those. Sure. So what I used to do whenever I would track all the time is I would pick out a specific, setup. So one of my favorites of all time is the gap and crap setup. A stock that gaps up, doesn't have any, previous day runs. It's just a random gap. It's got some type of dilution. It's a crap company. They're hurting for cash. They can raise money, or they already have an active, ATM, something like that. And I just track all those. So I look for stocks that have that same setup each time. So they need to have very similar, like market caps. They need to have similar floats. They need to have similar, um, you know, uh, say even sectors. You can categorize it that way as well. Um, but the main thing is they need to be somewhat similar as far as like you don't want to be tracking a small cap and then tracking a large cap and put that data in the same thing. They need to be fairly similar, like say 500 million market cap and less, or you can even go less than that, for a gap and crap. But you categorize it by having similar stocks that make the same moves, that maybe have like the same fundamentals, and you can even take the fundamentals out of it if you want, and just stick to the technicals. But when it comes to tracking data, I tracked everything, man. I didn't know what I was looking for, honestly. I just wanted to track every little piece of information to where I could try and find somewhere where there was an inconsistency. Because where there's an inconsistency, you can probably find an edge. So what I would do is I would track like how much volume pre-market, how much volume, at the open, for the first minute, for the first 5 minutes, for the first 10 minutes, what those percentages were at the open. Like say if the stock ran, how far did it go? In the first 5 minutes it ran 10%, maybe it ran 20%, track that data. What time was the top put in? Did it top out at, 10 a.m.? Did it top out at 10:15? Did it bottom out at, 2 p.m.? Did it bottom out at 11 a.m.? So I would just track every little piece of information that I could, and then I would find out where, like I said, those inconsistencies lie to where I could find that edge of what was gonna provide me the highest odds of winning in a trade. So I hope that answers your question, Mason. And how I back tested it, I used Thinkorswim. So Thinkorswim has one of the coolest features you'll ever see. It's called On Demand. So you can just type on, whenever you pull up the broker, you just go to On Demand, and you can look up any ticker you want from like decades ago. well, maybe not decades, but pretty far back. Like it goes back to like 2008 or something. So, even stocks that are, maybe ran a couple years ago, you can still track that data and you can see that stock run on that day as if you were watching it live, and you can track all that data. So I wouldn't sit there and watch it all day. I would just plug in the information and then the time frame that I wanted, and then it would show me exactly what that stock did on that day, and then I would track the data from there. um, Remster, superb trades, great self-confirmation, seeing how other CVTs in there, yeah. Okay. Okay, Jeremy asks, so Miah, you really don't have pattern that you like gap and crap or parabolic, etc. It's more like only tape reading that give you the setup entries. Do you collect data? If yes, so no, I think you might have misheard or misunderstood part of that webinar. Whenever I was going over, like how I build my watch list, what I look for, what I'm looking for in the technicals. When it comes to tape reading, all I'm using on tape reading is the entries. I'm waiting for the confirmation. I've already determined that it's a gap and crap or it's a parabolic move. I've already determined like the setup itself, the pattern that I'm trading. I'm just using, the technicals, the level 2, the tape, the volume, candlesticks for my entries. I'm not using that just to trade. So I don't just trade random stocks if it's not the right setup. It's got to be the right setup, and then I'm using the technicals, volume, tape, and candles for entries. So I hope that answers your question, Jeremy. DMAC looks like short time says, what is your ideal hour to enter into a trade? Do you trade pre-market? I I don't like to trade pre-market. Sometimes I do. Sometimes I fall into that trap, but I usually try to avoid pre-market unless it's a very epic setup. Like it's got to be a really good play. But I usually trade the first hour, no matter what, and and then I'll usually make maybe some trades midday. But I don't really trade in the afternoon. It's kind of rare. I usually avoid the last 2 hours. So I'm sorry, I missed a couple questions up here. I'm going to go back up. 2 times it says, what hotkeys do you use? Would you call your top setups? What would you call your top setups? So I use all my hotkeys set up on my brokers. And what I do is I have hotkeys to get in short. I have hotkeys to cover, say, a percentage of my position, and then I have a cover full position. So I have short, cover percentage, and then cover full. And I have the same thing on a long. I have, go long, sell a percentage, or sell all. And then I have a cancel order hotkey as well. So I have about 7 hotkeys total that I use. And what would you call your top setups? Man, I love the parabolic shorts. Those are like my favorite, I would have to say. And I do like gap and craps, even though we don't get too many of them nowadays. I still love those setups. But yeah, I would say parabolic shorts are probably my most favorite. Question, this is from Nearax. I don't know if I'm pronouncing your name right. Can you elaborate how you use and read candlesticks? How do you associate them with volume? Okay, so let's say if a stock is running, I'm going to just pull up a chart. You know what? I'm going to do it this way. I'm going to do it this way for you guys. Let's say if a stock is running, let me get a good one. What was one the other day that we were trading? ENTX. Is that one? Okay, so whenever you're reading level 2 tape and candlesticks, how do I pertain that to volume? So you can see out of the open on ENTX, it ran, it held, it spiked back up, but right afterwards, whenever it started bleeding out, there's no more demand coming in. Like, it's pulling back. If it was going to run higher, you would see the demand here. So, um, and where that would probably happen is probably this candle right here. If it was going to go higher, it would push, it would pull back, and then it would probably, this candle right here would probably, rip higher. So when it stuffs out and it puts in this big wick right here, and then, there's no more demand coming in and it just keeps selling off, um, that's how it would pertain, volume to reading the candlesticks along with the level two. I mean, they all have to confirm with each other. So let's say if a stock is, running like this and then it pulls back and then maybe it's kind of consolidating, but it's getting sold into, but the volume is still really strong. Like, there's probably a good chance that this thing's going to rip higher, even though it's getting stuffed out. So that's how it would pertain, volume to the candlesticks, especially if it's going to hold these highs here. So if it ripped up and then it started consolidating above these highs, but the volume is still strong, and even though it's getting sold into, as long as it's holding this high, then it's most likely going to go higher. So I hope that answers that question for you, man. Um, uh, let's scroll down here. Okay, DMAC says, got 3 questions. How far in advance is your plan for a trade? Uh, how far in advance? Well, I mean, I look for, I build my nightly watch list. I use my morning scans. So it's, I have it ready pretty early. I mean, I get up an hour before market open, and I'm looking to, go over scans and go over information, and maybe even locate some shares if I know that I'm most likely going to trade. So I usually have a plan set up like fairly quickly, especially if it's going to be like a midday runner. I mean, I can make that plan on the fly, but I'll use smaller size because maybe I don't have all the information that I need. So I'll reduce size on those trades. But if it's like something that I've been watching for a day or two, or if it's been something that popped up on the scans, and I've been watching it for like the past hour, and I have a plan ready, well then, yeah, I'm probably going to use the size that I want to, like a pretty big size. Um, and can you talk about Trade Zero hotkey setup? Sure. I would like to show you guys, but I don't want to give away my broker information. I can't do that without logging in. But how I do that is, like I said, I have my hotkey set up. So I have, say a short entry. I take liquidity a lot. I don't add liquidity, mainly because Trade Zero doesn't charge commissions for adding or taking liquidity. So that's a huge benefit to TZ, even though they do have some problems as far as like disconnecting, or sometimes shares are a little bit outrageously priced. Because of me being in the US and having a US account with TZ, I don't care about taking liquidity with them. Now if I'm trading with CP, those hotkeys are set up different. I'm going to be adding liquidity a lot of the time. So how I have it set up with TZ is whenever I'm shorting, I'm hitting the bid. Whenever I'm covering, I'm covering on the offer. And same thing with long. If I'm longing, I'm hitting the offer, and then if I'm selling, I'm hitting the bid. So I'm taking liquidity pretty much with TZ every single time. As a golfer myself, I find golf and trading similarities. Mental game, can you speak on where you may see the similarities? Oh yeah, yeah. I say that all the time. I've been trying to get Lucas to start golfing. I think he's golfing right now. Because I told him, I said it's very similar to trading. It's such a mental game, because you can go out there, golf, and it's such a hard sport, but it takes such a mental capital in order to stay focused. It's like, say you hit a good shot, and then you get to your ball, and then you hit a bad shot. You can get very emotional very quick, and that can affect the next shot on for that hole, or even for the next hole, or even the whole round. So in that aspect, it's very similar to trading. It's like, you're gonna make mistakes. You just gotta accept it, and then move on. Because nobody's gonna have, like I said, 100% win ratio. So um, yeah, you just have to accept that you're gonna make mistakes, and then just stay focused. Um, so Tony Danza says, "Thanks, Maya. Great presentation. You mentioned you see the tape turn, so that was your signal to get in. What things are you looking for the tape? Can you elaborate?" Yeah, I can, man. Okay, so Max says this all the time, and he is 100% right. There's not much information out there when it comes to tape reading or understanding, how to read level 2. The only thing that I can tell you guys is the best way to learn is to screen record. Record every single day, every single trade that you make, and watch, go back after hours and watch those trades, watch those videos, and rewatch the tape in those key moments. Even if you don't make a trade, if there's a stock making a massive move, like a parabolic move, record it. Record it and watch whenever it changes trend, and you can see those moves on the tape. Once you've seen them enough times, then you start getting a feel for it, and then you'll be able to get better at reading tape. But most of the time, whenever I see a turn in the tape, is you'll see a slight stall, and this happens very quickly. You'll see a stall in the tape, and maybe it happens for like a half a second or just a split second. You'll see it, and then you'll notice that the trend is starting to change. So it's not just the tape in level 2. You do have to consider volume and what the candles are doing too, to kind of help you confirm. What I like to do on like these parabolic shorts that I take a lot is I used higher time frames. So I'm going to look at like the 1 minute, the 3 minute, the 5 minute, and the 15-minute charts. So there can be a lot of fake outs on like the 1 minute and the 3 minute. So whenever I'm looking at the tape and I see like it's turning, I'm also going to be looking at those higher time frames, and I want to see if it's actually confirming for me there as well, because it can't just confirm on one chart. It's got to confirm on other places as well. So let's say stock is starting to run, it's going parabolic, and it looks like the tape is going to turn, and I'm thinking I should get in. I'll look over at the 5 or the 15-minute chart that I have up, and if it's not looking like it's time to get in, then I'll just be patient. I'll wait for it. Okay. But the best thing I can tell you about level 2 and tape is screen record. You got to record your screens, and you got to go back and watch them. And if you do that over and over and over, you're going to get a feel for it. You're going to get better at it. Because outside of market hours, there's really nothing that you can watch on level 2 or tape. There's no material out there. So the best way to do it is just record your screens. How many stocks do you watch at the open? Do you put alerts on price targets? That's a good question, McCoy. Sometimes I do alerts, but it's kind of rare, because most of the time, if there's a lot of plays happening, then I pick out the best ones, the ones that are going to give me the best, setups. Now, sometimes I choose the wrong ones, and I'm trading the wrong stocks, and maybe if I had focused on another one, I would have made a lot more money, or been a lot more stress-free of a trade. But I like to focus on maybe 2 to 3 stocks in the morning. I don't like to spread myself thin, because once you start spreading yourself thin, then you can't stay focused on the setup itself, on maybe the play that you need to nail. So I like to break it down to where I'm only looking at 2 to 3 stocks in the morning, and just focus on those, and I'll trade the one that's setting up the best. So I sometimes trade multiple stocks at one time. It doesn't happen all the time. I only do it maybe, I don't know, a few times a month, where I'm in like 2 or 3 stocks at a time, but it doesn't happen often. I usually like to focus on the best one and then nail that play, and then I'll move on to the next stock. And H would like to know your risk management strategy. Do you go with the max lose in mind, or size accordingly? There's also other factors involved. Example, if a stock is choppy, do you reduce size even more so that you can give more wiggle room? So risk management, that can change as the stock is trading. Maybe pre-market, the stock is looking like it's going to set up well, and then whenever the market opens, it's just not trading the way that I thought, and like the price action is just very trappy. So that'll drastically reduce my size. So it's all kind of situational on what's going on at that time. But if it's a good enough play, then I'll risk a lot. If it's not a very good play, then I'll drastically reduce size just so I can, manage the risk properly. You never want to put yourself in a position to where it can be detrimental to your account. So protecting capital is very important. That's why I was saying risk management is the most important thing to me. Um, you gotta stay in the game. You're gonna take losses. Keep that in mind. Just try and keep them the most minimal as possible. But if a stock is choppy, I'm most likely not going to be trading it. I like free flowing. I like stuff that's more predictable. I like good price action, stuff that it's just easier to trade. Stress free. So I look for the stocks that are going to be the more easiest to trade, and then I'll hit them with bigger size. So good question though, man. Xander, if the trade meets your criteria but you got in the wrong level, goes against you and you cut losses, if when you try again, how do you make the distinction that it's not a good setup anymore, or that it's just jumped on too quickly? How do I distinguish that? I'll use technicals in those situations. So let's say if a stock is running and it looks like I'm going to be getting into a position, and I say I take position and I'm wrong and I have to cut, like you said, and then it runs more, and then I'm thinking, okay, like this is a good entry, and then I have to cut again. Then it comes down to stepping back and just waiting for the technicals to line up. At that point, I'll probably just wait for confirmation. I want to wait for clear direction, a clear trend change to where then I know I'm going to be right. So that comes into part of the webinar where I was talking about, patience. It's okay if you're a little early, you can cut your loss. Don't add to your loss, just cut it. But also being patient to wait for, confirmation. So if you're, trying to catch the top, like everybody wants to catch the top. I know it's cool and it's fun, but it's hard and it's risky as well. So it's almost better to wait for wait for confirmation. You might miss part of the move, but at least your odds drastically increase that you're going to be right on in the trend. So that's how I would take it from there. If I had to take a loss, cut it, and then I tried again and had to cut it, at that point I'm going to step back and I'm going to wait for the technicals to line up, and I'm going to wait for confirmation. And then it says, what are the best signals short on the tape that this is not the setup you thought, and avoid taking another trade on it? How do you prevent over trading? This has happened to me. That's actually a good question. That's happened to me before, where it was on MTGX. That was what I think that was back in May. Yeah, MTGN. Yeah, MTGN or GX. Yeah. That one was kind of like an outlier. It kept running. It was making these like parabolic moves, and it just would not die. And I got to the point where I was like, okay, like there's something wrong here. Like this trade should have worked by now, and it's not. So at that point, I just stopped trading it. I stepped back and said, okay, I've given it a couple tries, and it's still not going to work. And even if I wait for confirmation, it's probably still not going to work then. It's just going to be another trap. So I just avoid it completely. And how do I prevent overtrading? How I prevent overtrading is waiting for those entries. Like I said, I want a 70% win ratio or higher in order to get in. So if it's not 70%, well then I don't enter. So that's how I prevent overtrading. Get it completely eliminate the FOMO. Is your 70% win rate based on one standard deviation? On how many samples do you generally consider on a good data setup for your setup? Baseline. Let me reread this. I don't know if I'm understanding, Miko. Is your 70% win rate based on one standard deviation? On how many samples do you generally consider a good data set for your setup? Do you have an all-day fade score formula by chance? Okay, so the 70% win rate, I tracked over 500 stocks. I think me and Lucas got into like 2,000 stocks at one time. So that it's a pretty big sample data, and we did that with multiple different setups and kind of figured out which ones are going to be the best for, your style of trading. So me and Lucas don't trade the same. We have similarities in our trading, but we don't trade the same. And that's the whole point of like trading is you got to learn from other people who are better, right? Take what works for you and discard the rest, and then kind of develop your own thing. And to get that 70% win rate or higher, like I was saying, I had a minimum of 500 stocks that was in that sample data. So I think, like I said, I think I got up to like 2,000 stocks that I had tracked. So it was a lot, but it was over a course of years. So I think I back tested all the way from to like 5 years. I didn't want to go too far because if you go too far back, then the data can be slightly skewed. We're trading in a much different market now than we were, 5 years ago, 10 years ago. So that's something to consider as whenever you're tracking data. And yes, I do have an all-day ADF score formula, but I don't use it, man. I made one and I tried to implement it in my trading, but I didn't see it that beneficial for me, so I just stopped using it. I only use what I like and what works for me, and then I just avoid the rest. I don't use like Fibonacci's or Bollinger Bands or some technical indicators that people use. Many people are use those and they benefit from them, but that's the thing. You got to see what works for you, and so once you narrow down what works for you, just focus on that. But McCoy says, how many trades do you average a day? Oh man, I would say close to 20, something like that. I know I trade on average anywhere from like 160 to 200,000 shares a day. So there's days that I'll get up to like 3, 4, 500 shares in a day, but that's kind of rare. I usually stick around anywhere from like 160 to like 250,000 shares on the day. That's probably my average, and out of about 20 trades, something like that. Short time says, if you don't have much time because is last time, wait, what? If you don't have time, if you don't have too much time because is last time runner, what part of the fundamental do you check? I don't know if I understand your question 100%. If you don't have too much time because is last time runner, what part of the fundamental do you check? So I don't get too deep into fundamentals. I think I know what you're asking now. I don't get too deep into fundamentals. Not that I don't find them beneficial. It's just that it's like I said, I only use what really works for me, and I'm really not too scared about shorting a stock that if I haven't looked into their fundamentals, because if it's a crap company, you're going to be probably pretty safe on the short side. If they drop an offering, the only time that I'm really looking deep into the fundamentals is if I'm really considering a long and holding it for a period of time. If I think like this stock is going to run huge, and I know that it's going to maybe take a couple hours to do that, then I'm going to look into the fundamentals, and I want to make sure that they can't like drop an offering on me if I'm going to be holding long. But on the short side, all I really do is I go in, I check the cash, their cash burn. I want to know if they already have dilution, if they can raise, if they don't already have dilution, and then kind of how desperate the company is, like what they've done in the past. So I can do it within about 5 minutes. It's pretty quick. What would you say their main difference between the way you trade and short bear? That's a good question. I scalp a lot more. Lucas doesn't scalp it near as much, or really hardly at all. He's looking for basically riding the trend of the day itself. So he's looking for intraday trend runs and wanting to scale in size and hold it for a period of time. I'm looking for quick moves, to the upside or the downside, very quickly, to where I can get in and out. And so I scalp a lot. He doesn't necessarily scalp. So that would be the main difference. Do you have specific times a day? This is from Matty Ice. Do you have specific times of day when you won't put on new trades due to personal trading stats? Yeah, that's actually a good question, man. So whenever I track all my trades and I go over everything, I found I didn't know I was doing this, so this was kind of cool. I found this out, I want to say maybe 6 months ago, that I found out I was losing money consistently from 1 p.m. to 2 p.m. And I didn't even know I was doing it. I was basically giving back morning gains. It wasn't a lot, but over time it added up to being a good amount of money. So once I saw that in my stats, that was a time that I would just give back money, pretty consistently during those times, then I just eliminated it out of my trading. So I don't trade from 1 o'clock to 2 o'clock. It's got to be a pretty epic setup to get me interested in and want to trade it. So otherwise, I just step away from the computer at that time, or I'll just chill out. I have a standing desk, so I'll lower the desk and then sit down and just kind of relax. But your other question, it says, also, once you get confirmation that buyers have exhausted, are you typically hitting the bid or trying to get filled on the ask? Yeah, I'm taking liquidity, man. Especially with TZ, I don't get charged for it, so I don't mind taking liquidity. When you have found exhaustion on the level 2 and confirmation after a parabolic, are you looking for a quick flush to cover or a full trend change? So on my first entry, I'm usually looking for like a quick wash to cover maybe a portion, like 1/2 position. And then whenever it bounces, that's whenever I really want to load into my size. And then I'm usually looking for a much bigger move at that point, down to support. It doesn't always happen, or, at times, there can be fake outs on the tape. So I take my money where I can as it's washing. I would really like to hold for some bigger moves. I used to do that, but I'm not as good at it anymore. My trading's changed over the years. Mason says, amazing, I'm doing something similar, tracking literally everything. Good, that's good, man. Okay, one thing you forgot to ask, do you see history repeats itself often in these names or in a specific name? Meaning, do you notice similar patterns often in the same name, asset class, small caps in general? When I say patterns, I mean certain gap up percentage, etc. What do you think causes these similarities? It depends on the company, man. It all depends on the company. Because, maybe there is one company that might have a similar market cap. It might even be in the same sector. They might even have a similar float, but they don't operate the same as maybe a company that gaps up and then just, sells off every single time. So the main thing is to look at the history and see what it's done in the past, and then kind of go from there. I know that Chris Verma, that's a lot of how he trades. I haven't talked really about it with him, but I've paid attention to his trading, and I know that's how he trades a lot of the time, is he's going on past history. So, but I'm sure he's broken it down to where he knows which ones to get in and then which ones to avoid. So it all depends on the stock itself, really. So, do I trade pre-market? Do I trade after hours? No, Stockman, I don't trade pre-market or after hours. I very rarely will I ever trade pre-market. I try and avoid it, but sometimes I get suckered in. It's got to be a really good play for me to do it. Remster, hotkey covers 100%, 80%, 1/2. Oh, okay. I guess he's saying that's how his hotkeys are. Uzair, I hope that I'm pronouncing your name right. You said, would you short a parabolic if the setup, if parabolic setup if the volume is low? Example, 800k shares. No, I would not. I would not touch that stock at all. It's very risky at that point, and it's super scary, especially if I can't get in and out on size. And I don't trade big size really, but I know I trade probably bigger size than a lot of you guys. But compared me to, like Max or, some other traders, I really don't trade that big of size, but you still need the liquidity. Volume is one of the most important things. So you have to be able to get in and out of the stock with ease, and you also need it to be a lot more free flowing, where the moves are more predictable, and that only comes with volume. So Did you trade under PDT? If so, how did you go about it? Yeah, I did trade under PDT. My first account was like 7 grand, and my second account was like 11 grand or something. And I blew both of those up. I lost all my money on both of those. But whenever I came back to the markets after that, I traded under PDT for um, just a short period of time. Um, what I did at one point is I opened up a few different accounts, and I had, you know, like 6 to 9 day trades in a week. So it depended on what broker I was using. You know, I could get, you know, in or out of the stock, depending on, you know, how many trades I had. But I also had a job, guys. So staying under PDT wasn't really a thing. It was more like I wanted to do it to myself just to, you know, keep myself from like taking stupid trades. Um, but you know, I could have funded my account over PDT. Um, so I eventually, once I got consistent enough, that's exactly what I did. I funded it up to like 30 grand, and then I just never looked back really. Um, DMAC. Oh, that was my next question. Okay. Um, Miko says sometimes you'll see price getting slammed down at hard price. Uh, oh, okay, that's not a question. All right, we have Guy or Gia, or I don't know how to say your name. I hope I'm not butchering everybody's names. Is data collection beneficial only as a personal project with your own setups, or is it something you can benefit from someone else's data? That's a good question. I think it's best to track your own data. And the reason being is once you track the data, then you get a better understanding of, you know, of how the stock moves, or how that setup plays out, and you can really understand, you know, which ones to avoid and which ones to get into. Not to mention, it's just going to benefit you from going over charts and just, you know, looking at data in general. So yeah, you can benefit from using other person's data, but there's nothing like tracking it yourself. So can data collection be a group effort? Yeah, for sure. I've never really tracked data by myself. I've always done it with Lucas. It's always been a project between me and him. So yeah, I think it's best to use a group if you can find like a buddy who, you know, wants to do the same thing. So I think that's smart. Plus, you can kind of divvy out the workload. So that's what we would do a lot. And I would say, hey, I'm going to track this data and use these tickers, and you track this data, and then we would combine our spreadsheets and you know, go from there. So it takes a lot of workload off as well. Can we start a data collection project in Madaz money? I don't see why not. I was thinking that too. Let's see. YO Trader. He says, do you scale into a trade, or you prefer one shot? Okay, so that's all going to be dependent on the size that I'm using. So if I'm using, you know, if I want to go in 20,000 shares, I don't use one shot. I'll scale in. If I want to go in 5,000 shares, I'll go, you know, the whole thing. So it all depends on the setup, what's going on, and what type of size I want to use. So that's that. I hope that answers for you. Morningstar says, how do you set up your exit targets for winning trades? So winning targets come down to, like, say, support, man. And like, let's just say if I had been, you know, shorting ENTX here, and I shorted it here at the top of this candle, you know, where I would want to cover is probably right here at this support level. Here, let me see if I can zoom in a little bit better. So you can see when the stock came down, ENTX, it kind of curled around. You know, that support line would basically be like 280, right? Once it broke, especially after it held it here. So if I was shorting here, you know, that would be my target. I would be thinking I want to cover down here at 280, you know. And you know, if it continues to bleed out, that's okay. I don't care about that. I caught the move I wanted. So I hope that answers your question, brother. NH, do you hold trades overnight? No, I don't. I don't swing trade at all. I only intraday trade. I'm in cash at the end of market hours every single day. Matty Ice, thanks for taking the time to answer the questions. I found my trading between 12:45 and 2 p.m. is best profitable trading times. Much appreciated, man. That's good. That's good. Keep track of your data. Always see where you can improve and keep going from there. It's this is a process that takes a long time. You know, if you can just slowly improve your trading daily, you know, just little small daily increments and get better and better every day. Lynn says, what services, websites do you use for news releases and company research, fundamentals, charts, trading view, any specific apps? No, I use all my broker information. The only thing that I use for websites is I use a website for halts. If, you know, whenever stocks are halting, so I can see when the halt times are and get an idea of whenever they're going to resume. And then I also use otcmarkets.com that for fundamentals. You know, a lot of people use BAMSEC. You have to pay for it. I'm not really a fan. And some people use Edgar, you know, .gov. I don't really like that site either. I just use otcmarkets.com. It's very simple. All the filings are dated accordingly. So that's what I'll use. So outside of otcmarkets.com and also you know, the website to see trading halts, everything else comes from my brokers. Here, this is a good example right here. This is where my news comes from, right? This is where like my data and my, well, it's blank right now because the market's not open. Otherwise, this would show data here. But it'll show, you know, market cap. It'll show float, shares outstanding. You know what the IO percent is. It kind of gives like a business summary of what the company is itself. I can look at the news, you know, see what's going on. And then I have level 2 and tape here. I don't really use this one. I use TZ and DAS. But yeah. But that's where I get a lot of the info. If for some reason I pull this info up on a stock and then it's blank, well then I'll go into the filings and I'll see what type of company it is. What is your trade setup? I can probably post a picture of my trade setup. I'll just do that, and I'll show you guys. But I think Max actually has it on his website. I'm not sure if he ever posted it, but we'll go to the next question while I grab that photo. How do you confirm the backside is in? What clues do you need to see backside, what clues do you need to see besides the tape? If it's breaking trend, that's a good question. So let's go back to the webinar and show these charts here. Let's go to a stock. This is a good one. We can use WIMI. So you can see obviously front side, obviously backside, but how do you know whenever backside is confirming? Backside is confirming, you see the pullback, you see it bleeds out, now you got support, now you got support here, okay? You can see it held support whenever it dipped down, it popped back up, but this bounce was really weak, right? It couldn't go any higher. It couldn't even consolidate, you know, above that support area right here. So once this support is broken, that's confirmation that it's backside, you know. So I would say runs up, pulls back, holds support here. The bounce is really weak, and then it breaks support, you know, this line. This is confirmation that backside is definitely in, because without that break there, the stock could easily, you know, like bounce up, maybe it pulls back, maybe it consolidates, you know, and then goes higher. But this is going to be, you know, backside for me is once that broke, you know. So you could short here, hold, and then in hopes of that breaking. That wasn't me on WIMI. I couldn't do that because WIMI had no daily resistance whatsoever. So I did not want to hold this for a break of support. I just wanted to get my quick move and get out. But yeah, that would be a good way to determine backside for you, Brand, is use technicals. Look at support and resistance. You look at the volume, look at the candlesticks. Look at the volume on it too. I don't know if you can see it, but the volume completely died out after that run up. So, you know, that's something to consider, is it runs up. It's trading, 300,000 shares, and now it can't trade even over 100,000 shares, on that weak bounce that it had. So, um, what's the name of the halt site? Ooh, let's see what we got here. The halt site. I'll link it to you guys. I'll put it in. I'll put it right here for you guys. Here is the halt site that I use. Motivate D-Man says, assuming a trade entry meets all your criteria, do you consciously get exponentially bigger on a $3 name like ENTX versus a $20 name like alt, so your capital per trade is similar? Yeah, actually I do. I use a lot of the same size, so it's not necessarily like the size of the shares, it's dollar value to me. So if but you have to be careful though, because a $3 ticker, say a $3 ticker, it takes an hour or 2 hours to run $2, but a stock that's a $20 stock, it can run, it can move $22 in a candle. So, you have to be a little bit careful when you're trading a stock that is a little bit more volatile than say a $3 name. Um, so it's all real situational in that sense. It depends on how volatile the stock is, how much volume is coming in, what type of range it has, what's the risk, what's the setup itself, is there resistance up above, or am I close to support? It's kind of hard to answer, but I'll let you know that my entries and sizing is all based on risk. So if I know that alt can move multiple dollars in a 1 minute candle, then I'm not going to use say 20,000 shares like I would on a $3 name that moves 50 cents in 20 minutes. So that's always something to consider. um, Here, I found a picture for you guys for my setup. um, let's get to the next question here. We have, at what point you go full size once the stock is on backside? I kind of answered this earlier, but I'll repeat it for you, man. So we'll use Nero as an example. So makes a parabolic move. I'm gonna start in short with maybe like 1/4 size. So I'll use 1/4 size here. So just in case I'm wrong, I have to cut it, and that's a small loss. So once it does confirm, it pulls back, it bounces. Now this bounce is, it's weak. It's not breaking out past the highs. This is where I'm going to load in the rest of my size. So once I get confirmation that that was the top, and it's going to bleed out, that's where I'm going to hit it. So after confirmation, and I could even do it on this bounce here, but I didn't. I was actually using like half size here. But yeah, I hope that answers your question, man. Here, I'll go ahead and post my setup for you guys. And what do we got for the next question? Best dollar ticket, more crowd on it. Does anybody else have any more questions? Are we almost finished here? I guess I can check the YouTube stream. I didn't actually look at that. I'm sorry, guys. Can you increase volume? Okay. Waterfin says, what does it mean by stuffing? That just means that the stock is like trying to, say if it's trying to push higher and it's getting, sold into, and it can't move any higher, it's getting stuffed. Here we go. Go ahead and share that. And let's see one last. I think there's another question here. Will this webinar be available at Madaz website? Yeah, I think Max is gonna have this up for you guys, so for whoever missed it, they'll be able to watch. Okay, there is one question for, are you still using Thinkorswim? Which platform do you prefer? Why? I use Thinkorswim specifically for charting. So I don't trade with them. I use them just for charting because I love their charting system. I think it's great. I think it's probably the best one. The only problem is sometimes it gets a little laggy. So, let's see. Yeah, the stream is on delay, Miko. So, let's see. Miko says, how much do you normally, room do you generally give on a starter with parabolic before considering cutting? That's situational, Miko. So it's not that I give it room. It's more like I'm watching it, and the only reason I entered in the first place is because I thought that the tape was confirming. So that's the only reason I would enter. I don't like to start. I don't like starters. I don't like to get in and have like a feeler or a starter. I think starters are just another word for having FOMO. It's just like an excuse for FOMO. You know, if I'm going to get in, it's because I think that the trade's going to work. That's why. So if I think it's going to work and then something happens and I have to cut it, then I'll just cut it. You know, I won't give it wiggle room or anything. I'll just get out. But the reason I'm getting in is because I think the trade's going to work. I don't like to use starters. I think it's just it's just an excuse for FOMO. Short Time says, do you like to wait at the open at least 5 minutes? Any special treat at the open? You know what? I've been telling my brother that, you know, for people that don't know how to trade the open, or if it's too volatile for you, then it's good to wait for like at least 10, 15, 20 minutes and wait for clear direction in the stock before you know, taking a trade, because a lot of the times, you know, you guys have seen it, as soon as the market opens, especially a stock that has a lot of attention on it, like the volatility on it can be, you know, it can move very fast in either direction very quickly, and it's sometimes hard to read. So I'll trade the first candle. I don't have a problem doing that, but I've done it many times. I feel comfortable doing it. So it comes with experience. Short Time. You gotta just be patient, and if it's just not something that, you know, is benefiting you at all in your trading, then just wait. You know, wait the 10, 15, 20 minutes. So McCoy says, do you have the 1 minute, 3 minute, and 5 minute chart up at the same time when trading? Yes, I do. So on my screens, so you can see my screens on the setup that I put. I'll have a 1 minute. I'm sorry. I have my 1 minute charts on the main screen in the middle, and then I have the 3 minute, 5 minute, and 15 minutes on the side on the sides. So that's how I set it up. Starsky says, since every second counts, is there a standard observation time before getting analysis paralysis on trade entry? Since every second counts, is there a standard observation time before getting analysis paralysis on trade entry? I'm not really sure what you're asking there, man. Maybe I'm just not understanding your question. But if you're entering in a trade and it's not working for you like fairly quickly, then there's something wrong. You know, you should be entering and the trade be working for you like fairly quickly after you enter. If it's not working for you fairly quickly after you enter, well then maybe you should be looking at, you know, scaling out of part of your position, you know, just in case you do have to cut, you can reduce your risk. So if I don't see I'm in the money within like probably a minute or less, or even a couple minutes, that would be probably the max. Then I don't want to be in that position. I want to be scaling out. So it needs to work almost instantly for me, like within seconds. But that's just how I trade. You know, that's not everybody. Tony says, what was the OTC site? It's otcmarkets.com. They just posted it for you. It's where I look at all my filings. Uzair says, "Can you share what your long setups? Wait, can you share what are your long setups?" Man, I rarely long, man. And whenever I do long, it's gonna be on a like, you know what? I have one for you. Let's see. I'm gonna pull this up. This was a long setup for me. So mRNA had a huge run not too long ago, right? It ran from, the basically $60. It even broke out over the highs of what is it? Like 87. It got stuffed and then it pushed back up, and when it did break the highs, then it started bleeding out. So now it's getting close to support again, and I love to like dip by these that stocks that have made huge runs and then now they're like dropping out drastically. I like to dip by those. So on this day, this was a good dip buy. You basically just wait for it to, hit support or confirm on the tape, And then there was another day that it dipped out right here. I caught this long. I missed this one at first, but then once it went red-green, I caught this one. I actually got long right here at 72, and then sold up here. So I love these like drops and bounces. So you have to be careful with these, but a lot of the times these will work as long as it's not like, bad news and everyone's selling. But you do have to be very careful with these because you don't know how far they will go at times. But I'll just tell you that a stock can't go straight down or straight up without some type of bounce or pullback. That's just not how it works. It's not how, supply and demand work. So when it's dumping out like this, it's gonna have a bounce. Now, when that bounce will happen, who knows? You have to pay attention. Watch level 2, the tape, the volume. Have to pay attention to support and resistance. This was actually, I believe, support. Yeah. So this was support right here. You can see it. Whenever it was dumping out, this is a 5-minute chart I'm looking over multiple days. So whenever this was dumping out here on that day, this is support. You can see it held here. There's the high here, So you have to pay attention to technicals. Ooh, I'm sorry. It was this one. I was looking at the wrong day. Yeah, here. So support, and when it came down here, it held support. So, yeah, you have to be careful with them, but they'll usually work. You just have to be patient. Morningstar says, do you use VWAP as an indicator in your trading? Example, if a stock is close to VWAP, avoiding short. So I don't really use VWAP in my trading. I have it up on my chart, but I have it on one chart. So I have 2, 6. I have 9 charts up at all times on my screens. I have VWAP on one of those charts. And it's not for anything other than to just be aware of where VWAP is. I don't trade around VWAP, but I know a lot of people do. So because a lot of people trade around VWAP, I just want to be aware of where VWAP is, but I'm not trading around it. So if a stock is dumping out, like say if it makes a run and then it's dumping out and it's hitting VWAP, I'll probably expect it to bounce there because I know people will just buy at VWAP just because it's dipped because it dipped down to VWAP, but I don't trade around it. I just want to be aware of where it is. Do you use hard stops or mental stops? NH says, do you use hard stops or mental stops? I use mental stops, man. And he says, also high price stocks like MRA, do you study the fundamentals before dip buying, long trade? I know this company though. So mRNA, I've traded it many times. So I already knew the fundamentals on this company. I knew what was going on. If I'm going to dip trade a stock like this, yes, I want to know what type of company it is, or I want to know why it's dumping. Like, is there bad news? You don't want to be, dip buying a stock that's going bankrupt or something, or just declared bankruptcy. So you kind of want to be careful. But as far as mRNA, I've traded this thing I don't know how many times. I traded it here, here, and then here. So I knew what type of company this was before I got into it. So, but I use mental stops, man. I don't believe in hard stops. Not that it's a bad thing. It's just that I've used them in the past and they've never benefited me. So I like to use mental stops. Remser says, cool, simple setup. Yeah, it's just simple, man. I want to get two 49-inch ultra wides actually. That's going to be my upgrade at one point. So I'll get two 49-inch ultra wides and stack one on top of the other. Car Soccer Joe says, why do you prefer Schwab over TOS? I don't prefer Schwab over TOS. This was the very first broker I ever traded with Schwab. It was back in 2012, and I'm just used to their platform. It's easy, but I don't trade with them, and I don't use them anything for other than scans, news, information on the company, and that's it. I don't use it for anything else. So it's there just so I can make my watch lists and pull up tickers on the scans. So it's fairly simple. I use TOS for charting, and I use TradeZero and CP for executions. Vitaly says, OTCmarkets.com only for OTC stocks? No, it has listed stocks too. NASDAQ, it's got them all, man. It'll be there. Juan Ramon says, nope. Uzair says, thank you. You're welcome, man. Miko says, the good old panic long starting to turn into one of my favorite setups. Yeah, if you turn the chart upside down, it's basically just like a parabolic move, so instead of shorting, you're longing. And you can do that with TOS too. If you guys ever did that with TOS, you can hit, instead of typing in the ticker symbol, you can hit negative and then type in the ticker symbol, and it'll flip the chart upside down, and you can look at it from a different point of view. It's really cool. Stockman says, do you put limit orders in for entry and exit? Seems like I missed entry or exit by one all the time. Do trade against us? I use limit orders, man. I never use market orders. It's strictly limit. That's just the way I like to do it. Most traders, use limit orders. It's really going to be getting you the prices that you want. The only way that I would use a market order is if I was in some serious trouble and I just needed to get out of the stock and it was like an emergency or something, and I knew that if I didn't get out I was going to lose much more. So it's very, I don't think I've ever used a market order actually. I've only used limit orders. But do trade against us? There's all kinds of theories. There's no way to really prove it, right? But I'm sure they do. I don't really worry about it too much, because I don't use hard stops and I don't, put in my orders unless I'm wanting to get filled right then and there. So I don't put in entries and then wait for them to get filled. I want to get filled right away. So. I'm sure they trade against us. It would make perfect sense, but I don't put too much thought into it. Motivate D-Man says 9 charts up. How many of the 9 are designated to the one name and are laser focused on? You mentioned earlier and 2 names simultaneously. Yes. So I have my charts linked together. So I'll have a 1 minute, a 3 minute, 5 minute, and 15 minute all linked. So that'll be one stock, and then I'll do that. I'll do that again with a different stock on another 1 minute, 3 minute, 5 minute, 15 minute. And so I'll have 2 stocks up at all times that I'm watching, that I'm laser focused, as you say, on there. And the other one, which is going to be my Schwab chart, that's where I'm just kind of kind of flipping through stocks. Maybe something pops up on scan, and instead of bringing it up on all on all charts, I'll just pull it up on here real quick and see if it's something that I would even consider trading. So yeah, that's basically how I do it, man. Let's see, do we have any other questions? So I answered all the YouTube ones, and we just have the chat. I'll stick around for a little bit more, guys. As long as you have questions, I'm going to stay, but once it ends, or if there's no more questions, then we'll go ahead and wrap it up. You guys had some good questions, though. I really appreciate it, because helping you guys also helps me. You know, it's always good to go back over things and go over, like, you know, basics and charts and all kinds of things. So it's not just for me guys, I mean for you guys, and it also benefits me. I really appreciate it that you guys are asking these. Yeah, good to know you don't pay for all those subscriptions. Yeah, I've never been that guy. I never paid for any of those subscriptions. I'm sure some people use it and really benefit from it, but it's really just not been my thing. Motivation man, or Motivate D-Man says, wow, there's a lot of different tells from 1 versus a 5, for example. Yeah, exactly right. Yeah. Short Time says, this week I was looking standing desk. Can you mind share the one that you have? Yeah, I got it from Uplift. So uplift.com, they are located here in Austin, and I went to their store and checked them all out, and then I ordered it online, and they delivered it. It's well worth it. It was one of the best things I ever got when it comes to a computer desk or a trading setup. I stand a lot of the times during the day, and it helps you stay focused because you're not, you know, like slouching in a chair. You know, you're standing up and you're alert. McCoy says, thanks, man. Have a good day. You're welcome, bro. NH says, thank you. You're welcome. Everyone's saying thank you. Much appreciated. You guys are welcome. Thanks a lot for your helpful advice and experiences on the journey. Anytime. Yep. Cool, man. Sounds like there's no more questions. You all are very welcome. Does Schwab charge for platform? No, it does not. No, you just need to deposit money. I've had like 20 bucks in there since like, I don't even know, 2014, something like that. Excellent webinar and amazing patience, attention, answering questions. Much respect. Thank you for taking the time. You're welcome, man. I'm happy to help you guys. I hope you guys found it beneficial. You know, there's so much to trading. It's so hard to put, you know, the information into a webinar. So I tried to cover little bits and pieces here and there so you could at least kind of pick up some questions, and then we could dive in deeper from the questions. So that's kind of what I tried to do. Awesome, guys. All right, I don't think there's any more questions. How do you get TOS without having TD Ameritrade account? You have to. TOS is TD Ameritrade. All right, guys. I'm going to go ahead and close up the stream. I really appreciate the time. And you all have a good rest of the weekend. And get ready for tomorrow. If you learned anything from today, what you should be doing today, or at least tonight, is going over your trades, maybe building your watch list for the morning, and getting ready for tomorrow, because tomorrow is a new week, and it's the last week of the month, so we got to end it strong. All right, you guys have a good one.